Credit card companies are closing cards down. They are closing them first and sending you a letter afterwards. Stay tuned for this video if you want to make sure that your card isn't one of the cards that being closed by the big banks. Hi, and welcome back to Starr Knows Credit channel. My name is Starr Carter, and on this channel we talk personal and business credit. So we're going to go ahead and get into today's video so I won't hold you guys too long. So as I was telling you in the intro, that banks are now closing down credit cards. So let me give you some of the reasons that they're saying why. Reason number one is because of lack of use on the card. So if you have a credit card that you've had for a very long time, it is a possibility that if you don't use that card more often, that they are going to close your card down for inactivity. So in order to keep your card active, that means you're going to have to start using it more often. But here's the problem with that. If you use it more often and are not able to pay the balance back off in its entirety, one, you can start paying interest, and two, if you're not used to knowing what the due date and the statement date and what the difference in those two dates mean, you could possibly be over your credit utilization and cause your credit score to drop. So let me just go ahead and briefly tell you, just in case if you don't know what those two dates means. So the due date is the absolute last day that you can make the payment on time. Also, it is the last day that you can avoid paying interest on whatever amount of spend that you used on the card. The statement date or the statement closing date is the date that your balance actually gets reported to the credit bureaus. Your due date usually will come before your statement date. So say your due date is on October the 1st, where your statement closing date may come, say, the 4th or the 5th. So you want to make sure between the due date of you paying your card completely back off that you're not, or if you're not able to pay it back off, that it's at least under 30% of the credit card utilization. So that means that if you have $1,000 credit limit, then if you're not able to pay it completely back off, you want to make sure that your balance is under $300 when it gets to the statement. Okay, so on your due date, you pay just the minimum. Say you just pay the minimum on the card, but make sure that the balance that is going to roll over to the statement is under $300 if you have $1,000 limit. So you can just do that for each increment of $1,000. Make sure, so say you got a $2,000 limit, well, $600, and then so on and so forth. So you just adding $300 to each $1,000. So that lets you know what your 30% is if you were to carry a balance. But I would tell anybody, do not carry a balance at this time. Even if you really need to, try to pay those off, because with the Fed hikes and interest rates are going up so much that you could be paying anywhere between 20 and 30% on your credit card. Some cases it could be even more, up to 39%. So you just want to be careful, because that's a surefire way to get yourself in trouble. So number two, another reason why they are closing your cards down is because you are defaulting on your other credit obligations. So if you had late payments and say you had other things to come on your credit report that does not have anything to do with the card that they closed, but you got other stuff going on your credit report, say you're late with another credit card, they can close your credit card down with them because of what you've done with somebody else. So you want to make sure that you are always keeping your credit in tip-top shape, no matter what card or what type of credit it is, whether it's a personal loan, car loan, whatever. You want to make sure that you're making all your payments on time and without any late payments, because they can shut your card down, or they could hike your interest rate up on the card due to something that you did with somebody else. That is possible. If your credit score has taken a hit, they can also hike your interest rate up, but they can also close your card down because they think that you might be at a higher risk. So one of the things that can affect you now, if they do close your card down, they could mess up your age of credit. So if you had this credit card for a long time that's been reporting on your credit report and they actually close the card down, that could lower your average age of credit, which could also affect your credit score. So you want to try to keep these cards still open. So I would tell you, do not overspend and get yourself in debt just to keep a card open, but you can do little purchases like use the card for gas, use the card for groceries, use the card for stuff that you're going to get anyway, just use the card instead of using your debit card, and that way you could pay it right back off, just paying it right back off with the cash you was going to use anyway. But do not get yourself in further debt, especially with us about to go into the 2023 holiday season. And another thing I would want to tell you guys, when your cards get closed, not only could it affect the length of the history, but it can also affect the utilization, the overall utilization, because not only do the credit bureaus look at each individual card's utilization, but they also look at it collectively. So that means that every card you have, they're gonna look at it, see if it's under 30% utilization, but they're also gonna add those balances and those credit limits together to see where you're at as well. So if you got a credit card that has like a $10,000 credit limit, and then that card is closed, and say you only got another card with a $2,000 limit, well, say you owe $1,000 on that card, well, you automatically are over the 50%. So you know you're over 30% because you owe half of the amount of that card. And that $10,000 card that you might not have had a balance on was equaling it out, but your credit could take a hit because you're automatically over the utilization when those cards are closed. So just letting you know that this is not happening just to people that have bad credit. This can happen to you with a high credit score. I was looking at Reddit, and a guy with a 760 credit card got closed by Citibank because he was not using the card enough. So this is really happening, guys. They are really tightening down. I did a video about credit unions and banks now declining credit no matter what your credit score is. So you just want to be careful that you are making sure that all your ducks are in a row. I really do appreciate you guys. If y'all got anything out of this video, please leave me a comment down below, like and subscribe to the channel, and I will be back with another video.